One of the most effective trading tools is the Supertrend indicator, but you'd be surprised that most traders actually use it incorrectly. We're going to show you how to use it like a pro. Please hit the like button, as it allows for our team to continue to produce more free content on YouTube. Let's start with the Supertrend basics. To access the Supertrend indicator, go to Indicators. Type in Supertrend. Click it, and it'll overlay on your charts. We alter the factor setting between 2.5 or 3, depending on the asset we are trading, but also based on the strategy we are using. The Supertrend indicator is a trend following indicator that integrates ATR, or average true range, to gauge market volatility. You use the Supertrend indicator to help identify your directional bias, meaning whether to trade with a bullish bias or a bearish bias. When price is in the green, it is bullish and in an uptrend. When price is in the red, it is bearish and in a downtrend. When price breaks below the green supertrend, it often leads to a trend change from an uptrend to a downtrend. When price breaks above the red supertrend, it often leads to a trend change from a downtrend to an uptrend. If you want to use the exact charting platform we are using right now, the link is in the description below. Let's now get into some strategies using the Supertrend indicator. Strategy number 1. Entering long trades while in the green and short trades while in the red. So when price is in the green, you want to look for long trade setups as you have a bullish bias. This reversal point gives you a key level. You have multiple long entry points through the touches at the key level. Another entry point at the break of the descending triangle pattern. Another entry point at the break of the ascending triangle pattern. Again, you are only looking for long trade setups while in the green of the Supertrend indicator, as it gives you a bullish bias and bullish momentum, so you are trading with the long advantage. Jumping to bearish. While price is in the red, you want to look for short trade setups, as you have a bearish bias. This reversal point gives you a key level. Short trade setup here. These reversal points give you a trend line. Short trade setup here. Again, you are only looking for short trade setups while in the red of the Supertrend indicator, as it gives you a bearish bias and bearish momentum, so you are trading with a short advantage. Moving on to the next strategy, trailing your stop loss using the Supertrend indicator. Price breaks below the green Supertrend and into the red, giving you a bearish bias. This reversal point gives you a key level. Short trade setup here. When you see the Supertrend indicator moving sideways and horizontally, that is where you put your stop loss. You put it slightly above the sideways Supertrend band, as it acts as a barrier and often protects your stop loss from being touched. Notice how the Supertrend indicator is moving sideways here. So you would trail your stop loss to here, slightly above it, leaving some space to breathe. You had a manual exit point through the break of the Supertrend indicator and higher high, or through here, where price would have hit your stop loss. Now that price is in the green and bullish, you are looking for long trades. These reversal points gives you a key level. Long trade setup 1 is here. Stop loss is placed here, where the Supertrend is moving sideways. The Supertrend band acts as a barrier between price and your stop loss, so it protects your stop loss from accidentally getting hit before continuing the trend. This reversal point gives you a key level. Long trade setup here. Stop loss is placed here, where the Supertrend is moving sideways. Descending triangle pattern and break, long trade setup here. Your trailing stop loss is moved here, where the sideways Supertrend indicator is clear. Again, multiple sideways Supertrend indicator movements, allowing you to trail the stop loss upwards. Once price breaks through the green and into the red with a massive bearish red candle, your stop losses would have been hit, and you would automatically be exited from your long trades with a profit. Let's show this again. Price breaks below the green Supertrend and into the red, giving you a bearish bias. These reversal points give you a key level. Short trade setup here, and stop loss above the sideways Supertrend indicator. This reversal point gives you a key level. Short trade setup here. Trailing stop loss moved to here, where the Supertrend is moving sideways. These reversal points give you a key level. Short trade set up here. Trailing stop loss moved to here where the super trend is moving sideways. And again, trailing stop loss moved here where the super trend is moving sideways. Once price breaks from red to green with the massive bullish green candle, your stop losses would have all been hit and you would be automatically exited from your short trades with a profit. Price moves into the green super trend, giving you a bullish bias. These reversal points give you a key level. Long trade set up here. Stop loss placed here below the horizontal super trend indicator. All these horizontal sideways super trend movements allow you to continue and trail your stop loss upwards. Now, after you find high quality trade setups, you need a reliable brokerage to actually enter and exit trades on. In 90 seconds, I'll show you how Moomoo checks all the boxes. First, fees. Traders like us who trade actively know that fees can add up quickly. On Moomoo, it's $0 commissions for stocks, options, and ETFs, plus $0 equity options contract fees. That makes a big difference when calculating your risk reward per trade. Fees aren't the only thing. Speed of execution affects your trading cost, and Moomoo checks that box as well. Another thing that's great about Moomoo is the free level 2 real-time quotes, including options. That's how we spot walls and liquidity as they form. Many platforms charge extra for this, but Moomoo doesn't. Last is reliability, because we are choosing a broker for the long run. Moomoo is a reliable and globally trusted broker with over 27 million users across the world. Moomoo is licensed in many major markets, is a FINRA member with SIPC coverage, and with over 100 plus industry awards. The best part about Moomoo is that it fully integrates into TradingView. Just open the trading panel at the bottom and you'll see Moomoo, the highest rated broker available on TradingView. Use the link below this video to open your account and get the promo offers. Then select Moomoo in the panel to start buying and selling directly within TradingView. The link below this video will get you up to $1,000 worth of NVDA shares while earning 8.1% APY on your cash. You want to maximize your gains as much as possible. So thank you to Moomoo for sponsoring this video. Let's now get into Supertrend band touches. While price is in the green of the Supertrend indicator and in a bullish uptrend, the lower band acts as a support level. This here is what you're looking for, where price touches the lower band of the Supertrend indicator and presents a high quality long trade setup. It's even better when you have a candlestick pattern form when the touch of the lower band occurs, such as this long wick candle, going in the opposite direction. While price is in the red of the Supertrend indicator and in a bearish downtrend, the upper band acts as a resistance level. This here is what you're looking for, where price touches the upper band of the Supertrend indicator and presents a high quality short trade setup. As always, using an indicator on its own isn't enough. You need to combine Supertrend band touches with key levels. This is the dollar-CAD currency pair. Price is in the red of the Supertrend, so you are looking for short trade setups. This reversal point gives you a key level. As price comes up, it forms a long wick candle that touches the upper band and the key level, which presents a high quality short trade setup. Again, price comes up and touches the upper band and the key level, presenting another high quality short trade setup. Price then breaks above the band and forms a higher high and enters into the green of the Supertrend, meaning you are now bullish in your bias and looking for long trade setups. These reversal points give you a very key level with multiple touches. Price comes down and touches the lower band and the key level and forms a long wick candle with a candle color change, presenting a high quality long trade setup. Again, price touches the lower band and the key level, presenting another high quality long trade setup. These reversal points give you a key zone. Very long wick candle touching the lower band and the key zone, presenting another high quality long trade setup. Let's show this again. These reversal points give you a key level. Long wick candle touches the lower band and the key level, presenting a long trade setup. Trend line placed like this, and once it broke above with the higher high and bullish momentum candle, your trend continuation upwards is confirmed. You had a gap down occur into the lower band, which presented a gap fill long trade setup. Let's show this again. Price breaks above and enters the green, giving you a bullish bias. And you are also at the start of a fresh trend change, which means price has room to move further. This reversal point gives you a key level. Price pulls back and forms multiple long wick candles at the lower band and the key level, presenting a long trade setup. This is also an inverse head and shoulders pattern. Neckline here, and once price broke above the neckline, long continuation entry point, as your trade setup here was your trigger event that gave you a confirmed bullish directional bias, and you are now riding the wave of the confirmed upwards momentum. Let's show one more. This is the Kiwi dollar 12-hour time frame. These reversal points give you a key level. As price comes up, you had a double top pattern that touches the upper band and the key level, presenting a short trade setup. This reversal point here gives you another key level. Price comes up, forms multiple long wick candles at the upper band and the key level, presenting a short trade setup. Place a trend line like this, and once it broke, trend continuation downwards confirmed. Now, a very key concept you must understand. Price action is king, and price action always comes first. You then use indicators to support what you have already identified and established with price action. This is the Euro-Dollar 1-hour time frame. Price is above the green supertrend, giving you a bullish bias. Price then breaks into the red of the supertrend, giving you a bearish bias. This long wick candle at resistance and the upper supertrend band presented a short trade setup. Now, when price came back up, you noticed these multiple long wick candles at the upper band and at the recent resistance level. And you think to yourself, this is a great short trade setup, and you enter short. And then what happens? Price breaks right through with the massive bullish engulfing candle, and you lose money. The reason this happens is because you are not looking at the big picture and not looking at price action from a larger scope. You are too zoomed in. Let's break down exactly what you got wrong. 1. The big picture trend is an uptrend, meaning this could just be a short-term pullback and not a true trend change. 2. You had this key support zone here where multiple long trade entries occurred, showing that buyers were loading up on long trades, which could potentially fuel the next move upwards. If price was truly bearish, this support zone would not have been respected, but instead it was respected multiple times and held strong, showing that buyers are not allowing price to go lower. If price was truly bearish, it would have made lower lows instead of same lows. 3. You had a trend line placed like this, which also makes this a descending triangle pattern. And once price broke above the trend line and broke above the descending triangle pattern with the higher high, this signals that the short-term pullback is over and that the next move upwards from the larger uptrend will continue. You just noticing this short trade setup at the upper band means you are only looking at the small picture price action and not looking at the big picture price action. And that is how most traders get caught into losing trades. But also why most traders fail when using trading indicators and tools, because they don't know how to piece it all together. Let's now take this all up a notch and get into Supertrend band touches with key levels, combined with the usage of multi-timeframes. Before we continue, we want to hear from you. Tell us in the comments below right now what video topics we should cover next. As always, please hit the like button, as it allows for our team to continue to produce more free videos on YouTube. This is the dollar-yen currency pair, daily time frame. Price is making higher highs and higher lows, so you want to trade with the strong uptrend. This reversal point gives you a key zone. Price pulls back and forms a long wick candle at the key zone and touches the supertrend lower band, presenting a long trade setup. You're also in the Fibonacci retracement zone of 50% to 61.8%, which is a very high quality pullback area of value within the moving uptrend, also known as the golden zone. Now, if you're just using one time frame, you would have to wait for this bullish green confirmation candle to enter long, meaning you wouldn't be able to get into this trade until all the way up here. For an earlier and more precise entry point, you want to look inside of your trade setup area, but on a lower intraday time frame to find trend change price action that signals this short-term pullback is over and that the larger uptrend will continue. But more importantly, to confirm that your trade setup is real and not a fake out. So let's pull up the 1-hour time frame and put it beside this one. On the left is the dollar-yen daily time frame we just looked at, and on the right is the dollar-yen 1-hour time frame. Your trade setup area here that we previously identified is this same area here. Again, you are looking for any form of price action that shows the pullback is over and that the larger uptrend will continue. Here's what you had. On this lower time frame, you were able to place a trend line like this. And once price broke above the trend line and went from the red bearish super trend and into the green bullish super trend, this confirms the pullback is over and confirms that your trade setup from the higher time frame is real and not a fake out, and is then when you would look for long entry points. There were multiple long entry points, but this one here was picture perfect, where you had a long wick candle touching the intraday key level, touching the lower super trend band, and touching the backside of the broken trend line, which resulted in a high quality long trade setup. But now, even at this point in time, you still need to go to the very low intraday timeframes, using our entry and exit strategy to minimize risk, but most importantly, maximize your gains. Now, if you had only used one time frame instead of multi-time frames, you would have got into this trade all the way up here. But by using multi-time frames, you were able to not only get into this trade earlier down here, but more importantly, enter with extreme precision, since you are applying price action within where your trade setup actually occurred, which increases your trade accuracy significantly. What we have shown you in this video is only scratching the surface. When you combine price action with order flow, this is when your trading is taken to the next level. If you want to use the exact charting platform we are using right now, the link is in the description below. Don't forget to tell us in the comments below what topics you want us to cover next. Make sure to hit the like button on this video, as it allows for our team to continue to produce more free videos on YouTube. So thanks for watching, and I'll see you in the next episode.